Welcome to the Market Edge Tech Talk with Will Pauly and special guest David Blake. We're going to review the market conditions of the past week as well as longer-term trends from a technical perspective, take a closer look at the major indices, and to wrap it up, dig into a handful of individual stocks and ETFs requested by subscribers. If you have questions or want to submit a stock for next week's webinar, email us at support@marketedge.com.
Hello and welcome to the Tuesday Tech Talk for Tuesday, September 18th. My name is Will Pauly and I'm here with my co-host, David Blake. David, how are you doing today?
Good, Will, thanks.
All right, let's get started with the market letter. David, can you give us a quick rundown of what's been happening this past week?
Yeah, let's go ahead and click on the weekly market letter here on the homepage. Okay, last week we kind of had a funny week, a lot of intraday volatility. This thing never works.
I was disconnected from the internet.
Oh.
All right, now, whenever this loads, start from the top of your thing.
All right, Will. We had a kind of a funny week last week. It looked like there wasn't a lot going on. There was some intraday volatility as we had both China and the U.S. reportedly were going to return to the negotiating table. But at the end of the week, all the major averages had climbed a little bit higher. We had the Dow up about 238 points. NASDAQ outperformed. It jumped 107 points or 1.4%. It basically had almost every sector. It was kind of a wide, just kind of an underlying move where every sector except financials actually finished in the plus column. It was led by energy, technology, industrials, consumer discretionary was good, healthcare was strong. They were all up at more than 1%. As far as the technical condition of the market, there wasn't a lot of change. The bullish trend was intact. All the major averages closed out in positive ground. The Dow Jones Transportation Index outperformed. It had another all-time record high on Friday. And as we closed out the week, we had the S&P 500, Dow, NASDAQ. They were all kind of flirting with new highs. Momentum was still bullish for the major averages. We also had some improvement in the Philadelphia Semiconductor Index, which has whipped investors both up and down the past few weeks. It was able to close back up above its 150-day moving average, which was good for the broader market going forward. And it also helped technology become one of the strongest sectors. So.
Let's move on and take a look at the market recap and look at some of these internal breadth indicators. So jump down to these.
Okay, let's go down to the AD lines here. As you can see here, we had a little bit the AD lines for both the Nasdaq and NYC fell back a little bit. That's why I said that the technical condition didn't have a lot of change last week. We did also see a little bit of, for the most part, we had more new highs, 52-week highs and new lows. I think there was one day last week on each day that we had more new lows and highs. But in general, things weren't too bad. We had the momentum index was actually up one notch from the previous week. It's still neutral ground. The breadth was positive. I mean. The AD lines did gain a little bit. We also had the sentiment index coming in at -2, which was down two notches, and that was negative, which means that a few of the indicators like the put-call ratio and some of the investment advisory ratios and stuff were also a little bit too exuberant, which meant that we had a little bit of a pullback in the sentiment. But in general, we were looking good. We did have a little bit of got a little spanking yesterday in the market when Trump announced in the afternoon that he was going to have an announcement after the market closed where he was going to put out those $200 billion in tariffs. And surprisingly, this morning, where we have the market up almost 200 points, most of that's on the fact that going to the tit for tat type of trade spat we're in right now, the tariffs are lower than what the market was anticipating, and it just gives the traders and investors a little bit more solid ground to work off, knowing that we're not going to be slamming 25% tariffs on each other, and gives us a little bit more room. And it seems like both countries don't want to really hurt each other at this stage. So we should be able to, unless there's some surprises, hopefully we'll get the markets once again moving up towards the new highs here over the next week or so.
Now that we've got an idea of how the broader market is moving, I want to take a minute to review our custom reports module, a feature some of our newer customers may not be too familiar with, but that we think can be a great tool for personalizing and streamlining your Market Edge experience. David, do you want to give us the rundown on how our viewers can make their own custom reports?
Sure will. All right. In Market Edge, we have default lists. And by what I mean default lists, we've put up some parameters that you may want to look up when you pull up a list of stocks or your stock watch lists. In this case, I'll come over here to Dow Jones 30. And when you print off your list or you take a look at them, we have some different things. We have the symbol, company name, what exchange it's on, year high, year low, where it closed, where the stop is. Different features that we think are important for you to take a look at. Here's the opinion, what the volume is, whether volume is spiking or whatever. But sometimes more experienced investors may not want what we have in the default list. They may want to build some of their own. In fact, I have some of my lists. What I want to do today is just show you some of the lists that I use and how you can do it yourself. Now, up in the upper right-hand corner, if you click on where the subscriber's name is, you can click on Manage Reports, and it'll come over here. We'll say Add a New Report. We'll click on that. Okay, let's name this report My List, just for lack of anything else. Okay, so what we want to do is you want to add columns to your report, such as, we're going to have the symbol will already be in there, the company name. I usually want to put that in there, and it's going to put what you want down here at the bottom. I always like to put the power rating in. That's one of our proprietary features, kind of like our relative strength. I'd like to have the year high and year low. Okay, we have that. Year low. Year-to-date change is also pretty nice to have in there. Of course, I want to have the opinion. I want to know what Market Edge thinks about the stock that I'm looking at. Something that's very important for your momentum players. I want 50-day relative strength. This is going to let me know whether the stock that I have on my list is outperforming the S&P 500 or underperforming the market. Okay, I want to put average volume. Rather than just the total volume, is because occasionally when I pull something up, if I see a report a stock that I like, and I see that maybe the average volume is 1 million shares, and all of a sudden I see it's had a nice move on 3 million shares, then I'm going to think that probably something has come up. I maybe have missed an announcement. Okay, we'll have the change, which will tell you whether the stock was up or down from the previous day. And the next two things that I have, because I don't like to chase a stock it's had a big move one way or the other before I go to buy it, I will look at the number one, the 1 week percent change. And I also want to put the 5-day percent change. And the reason I put these in, Will, is because I don't really want to look at a stock as a new buy candidate that may have jumped more than 20% in the last 5 days or something. That to me is going to be an overbought stock that I want to make sure that I want to, if it's up 7 or 8%, that's great. That means it's got some good momentum behind it. And the last thing I want to put in there is the up-down slope. And that's one of our also proprietary things that it's going to tell you whether the stock is under accumulation or under distribution. Okay, once I have all these up, and I can create the report by clicking down here in the right-hand corner. And now we have a new list of my list. It's what it's going to be called, with your columns and what you have. I can make this the default list if I want to, just by clicking on this. And now if I go to Stock Watch, and I want to look at, let's say, the NASDAQ 100, we'll say this is one of my previous lists. It's going to show all the different columns that I just brought up. If I have too many of them, which you don't want too many of them, I can downsize the menu up here in the right-hand corner, and that way I can see what's going on. Now in this case, remember we looked at, I'll take the 5-day percent change, see if anything's really spiked. Okay, here's one. Discovery Communications was up the last 5 days, 13%. So I may want to hesitate on that. 5-day percent change up around 12% is about as much as I want to take. 20% on the 1 week percent change is about as high as I probably will eliminate that. But this way, you'll get a list of stocks. You can put them up, list them by the power rating. If I come in here, okay, here's all in the NASDAQ 100. Here's the stocks that are having the highest the power rating. We've got Qualcomm, Illumina, O'Reilly, Apple, Xilinx. These are all stocks that are that are outperforming. They have a lot of momentum behind them. If I go over here and list them by the 50-day relative strength, this will let me arrange these stocks by the stocks that are outperforming the S&P 500 over the last 50 days. If they also have a high, I can sort these by that if I want a longer term source, or if I can say like what we just did with the power rating. These are in there. If you only can buy 2 or 3, you might come in here and you might buy this Illumina. It's had a little bit of a pullback. Qualcomm's had a little bit of a pullback, but still has a lot of momentum behind us. And that way, with your reports, what's important to you is what you can pull up whenever you pull up one of the modules for your stock analysis. I think it just customizes the reports for you.
All right, now it's time to move on to our questions for the week. Remember, if you have any questions you'd like answered on the next Tuesday Tech Talk, you can email them into support@marketedge.com or ask one of our live chat representatives to pass your question along to us for the next Tuesday Tech Talk. So our first question here is from a customer who's asking for advice on VOO. I believe that's Vanguard ETFs.
Yeah, that's all actually Vanguard's. That's the S&P 500. Let's put that in, VOO. And you'll see we have a long, so this is, if you're thinking of the SPY, would be another ETF that has the same thing. This is going to give you just a broader picture on this. And I'm going to go to the Technoscan report because we don't often look at this, and some people just get comfortable with the second opinion report. And basically, if you pull up an ETF like this, like the Diamond or the QQQs or the Russell or whatever, what this summary comes in this report should be fairly match what we're talking about in the market letter. Okay, and this summary for the VOO, current technical condition is strong. Chart pattern suggests that upward momentum should continue, which is what we see in here. This is why we've been calling for new highs in the S&P 500. I think today we're off about 6 or 7 points as of right now from what's going on there. This will give you some of the different indicators that I talk about in the weekly market letter. It should confirm what I say in there. And then if you come down here a little bit further, you're going to see that what's strong over the short term and the intermediate term, and what's showing some weakness. Okay, I did talk about in last week's market letter that the MACD short term, especially yesterday in the daily comment, had gone negative on some of these different indexes. At the bottom of the page here again, you'll see that right over here, MACD short term turned bearish on the S&P 500. That means we've had a little bit of sideways action, maybe a little bit of pullback here. But whenever we have a new bullish or bearish technical event, it'll show up here in the bottom. Down here at the bottom, also we'll put a chart in here. Sometimes we'll draw a trend line in there for you, give you a couple of the different indicators for this. And in this case, it's kind of funny because this is a relative strength versus S&P 500. The Vanguard S&P 500 has outperformed. I'm not sure how that's possible, but it's actually outperforming the broader market. But this will give you an idea of what to look for in a stock like this. And this, again, when you look at the broader market as an ETF, it's going to give you just basically what we talk about in the weekly market letter.
All right, sounds good. Next up here, we've got Halliburton, HAL.
Okay, energy has been kind of a funny sector to watch here. We have a void on Halliburton, as you can see. It's fallen down. It kind of bounced off here about a week and a half ago off of below 35 and bounced back up. Okay, here you can see we're down from about 54 down to 35. That's when back then 54 oil was trading up around 73, 74. We had a little bit of a bounce today. As far as the oil stocks go, again, we have a void on here. The power rating's -4. That power rating would need to go above 0 to go back to a neutral on this. So You are seeing some slight improvement on this in some of the oil stocks, but energy, it has pulled back. You could nibble away at some of these things, but I think at this stage I wouldn't be going all in. I'd like to see the XLE sector, which is the energy sector, start to show a little bit more outperformance than this. So Halliburton may be on your list if it gets upgraded to maybe an early entry buy, maybe a chance for you to go in and pick that up. But I think you're kind of front running energy and oil right now by buying some of these.
All right, and finally we've got General Electric, or GE.
Okay. From what I understand, the question was is GE a buy in here? It's been upgraded to a neutral. Our power rating is -2. It gets back down to -20. I think it's 28 or something. It goes back to a downgrade, to an avoid. I don't see any reason to buy General Electric. Even if we had a buy on it here, you're looking at maybe a very narrow trading range. I don't see a lot that's going on. You may have a little bit of mildly improving thing just off of the bottom. But a stock like GE, where it's been taken in the backyard and shot, at this point, the only thing you're hoping for, and what will probably happen with General Electric, is basically the insiders or the officers of the company will take some of the components of General Electric and spin them off into separate companies. If they have a company that's making the division is growing at 25% earnings growth or something going forward, they're probably going to spin that off. That way, the officers get a lot of get shares of the company, and they can actually make money again on that. So, rather than buy General Electric itself, I would probably wait and see if they're going to spin any parts off, and maybe look at some of the spin-offs, maybe the jet engines, or they got rid of appliances. I think they've gotten rid of some of their financial divisions, and buy the parts rather than the overall stock. Because this thing hasn't done anything since it's over the last couple of months, but just kind of maybe drifted a little bit sideways to lower.
Okay, well, that's all we have for you this week. Remember, if you have a question you'd like answered on the next Tuesday Tech Talk, email it into support@marketedge.com, or ask one of our live chat representatives to pass your question along to us for the next Tuesday Tech Talk. Thank you for tuning in, and we'll see you next week.